Hi guys, welcome to Trade Journal. Just a quick overview to see exactly how our trade's gone. If we remember this time yesterday, we were looking at what Bitcoin's going to do about this region. Okay, so if we use the replay tool, let's just rewind to exactly where we were. And we were around here. Okay, so what's the market currently doing and where are we? What's our bias? Are we bullish? Are we bearish? Do we think Bitcoin's going up or do we think it's going down? So as of yesterday, we could see that we were fast approaching our supply zone. And the purpose of a supply zone is to supply some downwards momentum. The purpose of a demand zone is to supply some upwards momentum. So what we can see as we approach the supply zone, we already have our 6-minute order block marked out. And as we approach, we can see that price on the 15-minute continues to print high highs and high lows. So high highs and high lows, this is an indication that price is at an uptrend. Although if we expect there to be a potential retracement, if we think price is going to change in the other direction, we expect to no longer print high highs and high lows, but to transition from high highs and high lows to lower highs and lower lows. Okay? Combined with that, we expect to see a change in market structure, and we expect to also see some sort of indication on market cipher to show us that there is a change in direction. And how does this come about? Well, what we look to see is a bearish divergence from the momentum and the money wave. So what is a bearish divergence? A bearish divergence is what happens when, as price continues to go up, momentum and money flow goes in the opposite direction. So what we can see here, if we play on a 15-minute, we can see that as price prints high highs and high lows, we can see that our momentum wave is trending downwards. So we can see momentum is flowing down whilst price is flowing up. Okay, so this is a big indication that, Bitcoin or the price is about to change direction. It's about to go in the other direction. And if we zoom out, what we can see on a more macro scale, we can see that we've had a first tap on November the 9th, we've had a second tap on November the 15th, and we are potentially having a third tap on November the 20th. Okay, and this is the Trinity Model 2. The Trinity Model 2 is named after Wyckoff, and it's just a 3-tap model for potential reversal. All right, so as we approach this level, I was thinking, well, this sure would be a nice place to get into a trade, but we still need to see our confirmation. So as we can see on the Discord, we can see I've written on Trade Journal saying, as we approach supply zone, there's a clear bearish divergence on the 1 hour and down, globally as well as locally. However, the 15-minute and 5-minute market structure is not yet changed. I'm tempted to enter this trade based on market cipher only, but market structure is king. I'll wait and see. There's also the opportunity of an involvement at a fib retracement. Okay, so I was really tempted to enter this yesterday. However, even though we were seeing, market cipher printing these divergences, we weren't quite seeing a change in structure. This structure over here, as you can see, is quite scatty. It's quite difficult to make out exactly what's going on. We can see our low here, our high here. And as we continue, price sort of goes down. It doesn't really take out that high, but it goes down. And it sort of plays around for a bit, not quite sure what it's doing. And then it starts the trend downwards. Okay, so here we can see that there is no clear indication of a 15-minute break in structure. All right, let's see what happened on the 5 minutes or the 6 minutes. Well, on the 5 minutes, if we trace the market structure, we have something that looks like that. Well, on the 5 minute, yes, there is a break in structure about there. So seeing that, I'm already thinking, well, there may potentially be a short on hand here. Okay, but I would like to see a 15-minute break in structure in order to confirm this. Bearing in mind, I'm also tempted from the market cipher bearish divergence, telling me that it's probably time to look for a short. Okay, but I didn't quite get into this one. I waited, and as we can see, price continues to trend down. Okay, we can see we've already had a 6 minutes, a 5-minute breaking structure. Let's see if we're going to take out this low, the 15-minute low, and bang, that's exactly what we do. So we take out the 15-minute low, and as we can see, we react perfectly off this POI. What's a POI? Well, POI is an area where we've got high probable likelihood of a reaction. Okay, we can see that this POI was the golden pocket, it was the value area low, and it was also a point of control. And we can see that price reacts very nicely off the POI. And at this stage, what am I thinking? Well, as I mentioned earlier, there is always the potential of entering a trade, after the break has happened and catching the trade on a retracement. How do we do that? Well, we look to see a change in market structure. We've seen a 15-minute break bearish. What we want to do now is look at the market structure as we tend towards our retracement zone. Now, what is our retracement zone? How I like to draw my retracement zone is I like to look at the fib level. So I draw a fib from my swing high to my swing low. And what I can see here is that we've got the golden ratio, marrying quite nicely up with some supply levels. And we've got the 786, okay? And that lines quite nicely up with all this liquidity up here. So what we're going to see then is just look at price as we tend towards that level. And what we can see is that price wicked quite nicely off the 786. And there it was. That was your indication for that trade. Okay, you've had your breaking structure on the 15-minute. You've had the retest, and you've had a reaction of the 786. Now, if we look at the 3-minute structure, we can probably most likely see a change in structure at that level. Okay, so actually the 3 minutes, it's not quite clear. Let's look at the 1 minute. We can see on the 1 minute as we tend towards that level. Okay, we've got a high, a low, we've got the high that's taken out. We've got another high over here, another high up there, and boom, there we go. That would have been a breaking structure, breaking that low. However, this break was quite a decisive break. I can't imagine many of you would have entered this trade, because it was quite a decisive break, and it broke through one low, second low, third low, all the way down here. But regardless, it's still a breaking structure. Okay, so this is quite a difficult one to enter, but what I did is I placed my limit order right at the 786, and that entered me into a very nice trade. And some of you may think, well, where does my stop loss go? Does it go here? Does it go here? Well, your stop loss needs to go above your swing high. Okay, now this gives us a stop of about 1.15%, with the chance of getting a risk to reward of around, well, let's have a look. Risk to reward, well, let's see exactly how the trade went so that we can calculate that. If we play, we can see that price continued to go down, try to test the golden ratio, continued to go down. Okay, went straight through our initial area, our initial POI, and this trade did quite well, and you've got a 4.83% risk to reward. Okay, so that would have been a successful trade based on that entry model. All right, so bearish divergence on market cipher, change in market structure, and entry at the retracement at one of the fib levels. Okay, and as we see, guys, we can also look at what price has done. So price has come, and where has price bounced off of? Price has bounced off of our second POI. Okay, now this was our value area high plus a previous golden ratio, and price has gotten the most perfect bounce off that level, right to the exact amount at 35,621. Okay, and as we can see, all right, could we have taken a trade at that level? Well, let's see, what are we looking out for? We're looking for a change in market structure. We're looking for market cipher, probably the best indicator in the world, to go and print a bullish divergence. So let's see if we can find those two things. Well, what we can see here is that as price is coming down, we can see our momentum waves trending up. So immediately, that's a bullish divergence. Price is going down, momentum wave is going up. And we can see here as well that money flow is beginning to curve upwards. So this is a clear indication that this may be a point of reaction. This may be a high probability area for the price to change in direction, all right? But is that enough? Is that enough confirmation to enter a trade? Well, in my opinion, no. You need to see a change in market structure. So what we do at this point is we go down to the lower time frames. We've gone down to the 5-minute time frame, and we can see here that price sort of flushed all the way down quite quickly. So there's no real structure here. So it's quite tough to enter this trade because there's no real clear indicative market structure of lower highs and lower lows. All right, there is a tiny, order block here, but there's no real change in market structure that I can see. Now, of course, if you place a limit order at that level, yes, you would have entered that trade and you would have been lucky in that scenario. But is there a real market structure change here? I wouldn't say so. Okay. All right. So now let's look at the 3 minutes. Let's see what the 3 minutes has to offer. So again, on the 3 minutes, I can't really see any clear market structure to indicate, a change in market structure so that we can enter that trade. Let's look on the 1 minute. On a 1 minute, there is, I would say there is a little bit more structure. If we just trace this down, we've got high, breaking structure. I'll take that one. Okay, and then we come up, and I guess we would count this as our first break, potential retracement, and a boom off. All right, but that 1 minute structure is quite difficult structure to follow on its own. All right, but after bouncing off that POI, I guess that would give you a little bit more confidence as to whether to enter that trade or not. So where would you have entered that trade? Well, if you made a limit order, you'd have entered a trade there, right at the POI, but I would not recommend that. I would not recommend that because that is risky. So what could you have done? Well, you could have waited for this break in market structure to look to enter at that level, to enter at that retracement level, and that would have got you into the trade right about there. Okay. And at that level, your stop loss, where would it go? Would it go underneath that exact low? No, it won't. It needs to go under your swing low. So all the way down there. So you've got a stop loss of around 0.97%, which isn't the worst, but it's, it's not the best either. Okay, because of the lack of market structure in this region, it makes our trade that bit more risky. All right, let's draw our fib and let's see, at what level we would have entered that trade. So you see this fib, it doesn't even come back to test the 382. Okay, so this would have been quite a difficult trade to enter. All right, even though it did bounce perfectly off the POI, the POI that we've posted on the Discord. And if you want access to this information and you want access to all the POIs, feel free to join the Discord where, trades are posted, on a daily basis. But if we were to enter that trade over there and drove it all the way up, what we would expect to see in that case, if we go back to the 15-minute, I'll get rid of this because that was a very difficult place to actually enter the trade. Okay. So what we can see here is that we would have driven this trade. I'll get rid of this as well. That's just so we can follow this trade and see how well it's done. We press the play button. So yeah, it doesn't come back. It continues, it goes up. She goes up, she goes up, she goes up, she goes up. Okay, and at this point, I was actually looking at the chart to see, okay, are we going to get a potential retracement back? A retracement that may look like this, and shoot off at the 786 or the 382. Sorry, the 786 or the golden ratio. But unfortunately, that didn't happen. So what we saw is that the price continued to go up and up. Okay. And up. All right, and then we got a nice, demand up, and the price continued to go up. Okay. So that would have been the second potential trade that we could have got into, but that was slightly more difficult to enter. So those are our two trades over the last 24 hours. So at the moment, what's Bitcoin doing? At the moment, Bitcoin is going back to retest those supply zones, retest that high. As we say, it's been there once, it's been there twice, it's attempted the third time, okay, and now it seems to be having another go at that high, right? And at that level, again, this is a very, very important level, a very important POI, and no one knows whether it's going to blast off or it's going to retrace down all the way to 30,000. But what we can do is we can be prepared and we can look for our confirmations at those levels. What are our confirmations? First of all, we're looking to see, is there any change in market structure? Are we going from printing higher highs and high lows to lower highs and lower lows? Secondly, now is Market Cipher telling us that this is a potential place for a change in direction? Are we seeing any bearish divergences? So let's see. So we're on a 15 minutes. If we just print out the 15-minute structure, we can see that we've printed out a high, a low. Not sure you would class this a high, but for demonstration purposes, let's see. That takes us up there. So on the 15 minutes, we're still on a bullish trend, regardless of how you draw it. Let's go down to the 5 minutes, and we're going to do that in a different color. Okay, on a 5 minute, or if we start from here perhaps, on a 5 minute, fairly similar to the 15 minute. Our 5 minute low is still all the way down here. Okay, so what I'm going to do is put that in a different color. Let's say we'll put that in orange. So on a 5 minute, that's what it looks like. Let's see if we've got any divergences. We do have a 5 minute divergence. We can see that as price goes up into our level, momentum is going down, as well as money flow. Money flow is also going down. Okay, so this is an indication that there may potentially be a reversal at this level. We're not entirely sure whether it's begun yet, but Market Cipher says there may potentially be a reversal soon. So what I've actually done in this case is I've entered this trade, okay, and this thing is exactly how I entered this trade. I've entered this trade from 37,770. So that's from up here. It's 37,770. That's from up here. And how did I get into this trade? Well, what I did is I went all the way down. As soon as I saw that bearish divergence heading towards that supply, what I've done is I've gone all the way down to the 1 minute. Okay. And on the 1 minute, yes, I can see a little bit more structure. Okay, I can definitely see a bit more internal structure that's facilitating these push highs and push lows. So on a 1 minute, this is what the structure looks like. We've got higher high, higher low, higher high, higher low, higher high, and then we're looking to see whether there is going to be our first lower low. Well, it doesn't happen here. It doesn't happen here. All right. It doesn't happen here. So what we see now is we can see that price flirts around with the area, shoots back up, okay, and then that break of structure happens right around here. Okay, so we can mark that out. We can say this was our break of structure. We can call that a boss. Well, it's an IBOSS. It's an internal break of structure. Okay, and after that break of structure, we can see that again there is just a series of lower lows and lower highs been printed as price comes all the way down. Okay, but this was a slightly more risky trade for me, and I did get in. I did place a limit order because I thought to myself, well, I've already missed out on the trade a few days ago where I saw the bearish divergences. However, I didn't see the change in market structure. So I said to myself, well, today I'm not going to make that same mistake. As soon as I saw these lows printing, okay, and on the 1 minute, on the 1 minute, as soon as I saw that change in direction here, that break in 1 minute structure here, I decided, well, I'm going to give it a go, get into this trade and make my stop loss really nice and tight. Okay, so right now I'm already inside this trade. And what's happened is I have moved my stop loss to entry ASAP. Okay, I've moved my stop loss to entry. I've already taken 50% out of my trade. And regardless of win, lose or draw, it's going to be a profitable trade. Okay, well, that's exactly what we've been looking at. Those are the trades we're currently in. I'll keep you updated on how it goes tomorrow. And yes, remember, make sure for every trade you're looking for set confirmations. That's going to allow you to remove your emotions from entering these trades. You're looking for a change in market structure. You're looking at your fib levels, and you're looking at market cipher. These three things alone will allow you to enter more high probability trades. Okay, and that's the whole idea of trading, stacking the probabilities in your favor so that you can maximize your capital. Okay, all right, well, that's it for me today. If you want more information about my trades and how we're getting on, feel free to join the Discord at Trade Journal Community, and I'll catch you there. Thank you.